Hey traders, in this video we're gonna go back and have a look at the 1987 crash, the 1929 crash, and see if there's some similar situations that was happening back then that's happening now. So let's actually get straight into this video. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, so guys, what I want you to do in this video here is that I want you to keep an open mind, okay? You know, some brilliant minds on the planet. Albert Einstein said, if you want to know the future, look at the past. Right, so let's actually go back and have a look at similar situations that's happened in the past, and let's actually go have a look at some of the biggest stock market crashes in the world and see what actually happened then. All right, whether you're bullish or bearish in the market right now, let's just keep an open mind. And this video here is to really educate you. Now, it may be a bit longer than one of my other videos, but I really want to walk you through in detail of what the past was saying. What the past, you know, again, if you want to know what's coming, look at the past. Again, not me, Albert Einstein said that. So let's actually go and have a look at what the 1929 and the 1987, let's look at the fundamentals, let's look at the technicals, and let's see if we can find some similar resemblance of what's actually happening right now. Because again, if we want to see where we're going, let's actually see what's happened in the past. So firstly, let's go have a look at what caused the stock market crash of what caused the crash of 1929 that preceded the Great Depression. So it said the stock market crash of 1929 was due to the overbought, overvalued, and excessive bullishness. We're getting that right now, aren't we? So many people bullish, especially this, right? Rising, it was rising even as the economic conditions were not supporting the advance. So you guys know that right now, right? You guys know that what we said right there. We know stocks are overvalued, stocks are overbought, or the market's overbought, especially the Dow Jones and the S&P and stuff like that. I think it's trading like 25 times and stuff like that. But you guys know, right? But looking at this, is that the fundamentals and the economic conditions are really bad. I think a lot of it, even most of it, should I say, is actually worse than 2008. And you get a lot of bad activity. So you can see this is, okay, the stock market of 2009 was due to the market being overbought, overvalued, excessive bullishness, which a lot of people are right now because they believe in the Fed, rising even though the economic conditions were not supporting it. This is the very first thing that we're seeing right now. Again, let's look at current present to what actually happened back in 1929. So the crash began in October 24. So remember that date here, okay? When the market opened 11% lower, institutions and financials, etc., you know, they had the panic and so on and so forth. However, it bounced and so on and so forth. And let's actually see here. It says here, guys, that in the first half of the decade, companies were doing excellent business, exporting to Europe, which was rebuilding the war. Unemployment was low, and automobiles were spreading across the country, creating jobs and efficiency for the economy. Until the peak in 1929, stocks prices went up nearly 10 times. 10 times. What have stocks done recently? Geez, I think some of them especially in the S&P, I think some of them are done a lot more than 10 times, right? I think some of them are done like, yeah, just crazy amounts, right? Just absolutely crazy amounts. The economic growth created an environment in which speculating in stocks became almost a hobby within the general population, plunging into the market. Many were buying stocks on margin as a ratio as high as 3-to-1, meaning that they were putting $1 of capital of every $3 stock they purchased. This also meant that a loss of 1/3 of their value in the stock market would wipe them out. Now, guys, I'm not sure if you know, but the derivative bubble also includes those margin. And as you guys know, right, the derivative bubble, which is the CSOs and CDSs and all that sort of stuff that the banks have got right now. But they're also included in that is margin, right? A lot of people have margins right now, and I think a lot of them are actually a lot higher than the 3-to-1. So that is actually included in the derivative bubble. So let's actually look here. So you can see, guys. Let's actually look here. So that's basically what we can see there, right? So we can get a good glimpse of that. We actually can see that there's a lot of margin there. A lot of people are bullish right now. Even a lot of people are bullish, even though the economic is not supporting it. And so you can see here, this is what happened in 1929, right? So we can see what's happening on the fundamental economic side, and we know there's very similar situations happening right now, right? Let's just look at the facts for what they are. Stock market's still going up, while what economic conditions and overbought have been just crazy. I think S&P is like 25 its earnings. So let's actually go have a look at the chart now. So this is 1929. Let's go have a look at a 1929 style of stock market crash. What is this one here? 1929. So I looked at this PDF, and I was reading through this PDF, and here was the chart. So you can see. Let me actually just blow this right up here. This was the chart here, and this is basically the Dow Jones daily chart. Okay, guys, this is the reason why I focus on the Dow Jones in my videos, right? Because you can see that the Dow Jones is actually showing you what's going on. Now, guys, I know this is quite simple, but if you see what's happening with the Dow Jones right now, and it's rolling over, lower peaks, lower troughs, guys, I'm telling you, and I'm putting major alert warning to stop you guys if you are bullish in the market, just to have a warning there, because again, don't be blinded by what's going on right now and what's happened in the past, because it's very, very similar situations. So you can see here, guys, that we actually had this trough through here. We had this peak. We had this lower trough. What do we have here? This was a lower peak. And once this lower peak was actually broken, and as you can see, that there is nothing bullish about this. And that's why I keep saying, guys, look at the peaks and troughs. The market came down. So just by looking at these peaks and troughs in the chart, you can see that's when we had the big crash. We had a nice sell-off through here. Let's actually do that again. We had a nice sell-off through there, came up, created a low peak, came down, and then we broke down. And then, like, during the whole October, especially the 24th, we actually had a pretty decent pretty decent run down. And this was the from there to there. You can see how much it actually wiped out on the Dow Jones weekly, right? But then you can see how that actually created the stair step down. Are we likely to see that this October? Question mark. Again, I'm not saying we are, but are we likely to see a 1987, 1929 stock market crash this October? That's the question mark. So I'm just leaving that out there. So let's actually look at this here. So you can see this is what the Dow Jones monthly 29 chart looks like. You can see there's a few things that caused the 1929 crash. Stocks were overpriced, as we talked about. Massive forward in illegal activity. That's always happening, especially in the government. Margin buying, we know that. Federal Reserve policy, well, we know what's happening with the monetary policy with the interest rates there. And so much more that's happening through here. So is there another chart here that I wanted to show you guys? Yeah, here we go here. Right, so this was the 19. This was the actually this is what the 87. This is what the 87 crash looked like. But let me actually step back a bit there. So now we've actually looked at the 1929 crash. Right, we can see what's happening through there. We can see that there's a lot of the bigger picture there, guys. The bigger picture that we got here is we've got major debt that we can't support. But the bigger picture is that the economic picture does not meet its current value, meaning there's no equilibrium there. And as you can see with 1929, we got a hard and fast snapback. So if you have superannuation retirement funds long in this market right now, guys, there is so much warning out there. It's just crazy. So that was the 1929 stock market crash, right? And we can see what happened there. Look at this chart here. What's this here? 1929. You can see what happened here, right? But by looking at this chart here, once again, guys, look at the peaks and troughs. It's gonna save you such a heartache. You got this trough here, ran up, made this peak here, came down, gave this low trough, gave a low peak, and when we started breaking that, guess what? You shouldn't be long in the market because it's low peak, low trough, and then we came down. You can actually ride that down because you're what? You're selling into the markets. I'm not saying you should do that, but I'm just saying that's basically what you can see. So let's now go have a look at the 1987. The 1987. What caused Black Monday, the stock market crash of 1987? Now, guys, these are two different markets. One was 29, one was 87. The stock market of the cause of the stock market crash of 1987 was primarily programming trading used by institutions to protect themselves from significant market weakness. Some secondary factors include excessive valuations and liquid markets and market psychology. Now, guys, let me actually stop you there for a minute. What did I just say there? The 1987 crash was due to program trading used by institutions to protect themselves from significant weakness. What's going on right now? What actually happened last August when we got the flash crash? Why did that happen? Why did we actually get that? Why did that actually happen back in last August? So if I bring up a chart here, let me see if I can bring this chart up here. If I bring this chart up here, right? So this is obviously the Dow Jones current market. But if I go back to August last year, where are we here? Is this where it is? Yeah, August. So August, you can see this sort of downward move. What caused this down move in August last year in 2015? Well, if you guys know anything about it, what caused it was obviously the devalue of the currencies of Chinese, but it was the machines. It was the machines that were selling into this because they were fearful, right? They sold into it. It was these big institution, high frequency traders that said shit, and they sold into it, right? Go look at it. Because, guys, most of the trading that's done on the markets right now is done by high-frequency traders. And that's what caused this sell-off through here. And the same thing for this sell-off through here as well, too. Once the interest rates were raised and it sunk in, the machine said shit. And people and also the machine started selling off. So, guys, we are in the machine days. You guys know that, right? I mean, I'm looking at the facts for what they're really about. So you can see by using this. Some secondary factors include excessive valuations. What's happening right now? We have excess valuations. Sometimes 20, 25, sometimes as high, I think it's like 27. I think the highest. I think Amazon is like 20s, high 20s valuation, right? They're so extended from that. And guys, that's basically what this article goes on to talk about. All right, it talks about that it was simply that, and what actually happens is that these machines are there to protect. Portfolios of these big hedge funds. So if the market goes down to a certain point, guess what? Now they start selling, and guess what? Now other machines start to sell, and then they sell and sell and sell, and now it becomes a self-fulfilling prophecy, and now we actually come down. So, guys, that's what we see in 1987. So we can see that in 1987, it was caused by machines. We already saw that last August, because of the devaluing. So we know the machines are actually there, active, making this happen. We all know that, and we all know that the excessive valuations are there right now. Very, very similar back to 1929. So we can see right now that these valuations are really, really, really a big thing in that. You can see here that it says program trading's market exacerbated market weakness, even though it was designed as a hedge. These computer programs automatically begin to liquid stocks as certain loss targets were hit, pushing prices lower. Then the lower price fueled more liquidation, with stocks dropping 22% on the day. This is an example of behavior that is rational on an individual level, but irrational if everyone adapts to the same behavior. So, guys, once again, you can see what happens there, right? And what happens if the market really starts to sell off and something bad happens in the economy? These machines are going to go crazy and start to sell really, really quickly. So we're getting all of the factors that happened back in 1987 or 1929, should I say, which was the bad economics. Back there was bad economics, and the overvaluations and the stimulus and all that sort of stuff. Now we're getting the 87, which you can see the valuations are too high. You can see that even Carl Icahn has been saying that as well too. Now, we can see that's 1987, but let's actually go look at the actual let's actually look at the actual charts. And this is what the charts look like. Now, what do the charts look like? This was the Dow Jones weekly. This was the Dow Jones 87 daily chart. Again, let's just look at the chart. We can actually see what's happening here on the chart. What is happening here? The market came down. This was a trough here. This was a peak. This was a higher trough. But as you can see, right, as the market came up through to here and it created this lower peak, and you may not have known that it was a lower peak, but guys, as you can see, and this is why it's important to bend and mold and flex on the market, because if the market starts to come down through here and we start to break this low here, we now have what? We now have a lower peak, and now we're breaking down through here. We're now going to create a lower trough sometime. Now, who's in control through here? Sellers. You should not be buying into this market because the sellers are in control. And then bam. And as you can see, this is how, guys, this is what's important to do. So now I've gone over, guys, I've gone over the 1987 crash. I've gone over the 1929 crash. I've gone over what was happening economically and fundamentally within the stocks and with the economy and the 1929. And guys, all I'm saying is this. Every single thing that this market has done, right now we have a combination and probably a lot worse. A combination of the 1987 and the 1929 situation put together, which to me is going to create one of the biggest stock market crashes on the planet. And I'm not just saying that because I've heard it from somewhere else. I'm looking at what the facts are saying for what they speak and how far this has really been dragged on and the liquidation. And guys, as you can see, right, that these stock market crashes were only due to what was happening in the United States. Let alone, guys, right now the whole world is in a bad place. The whole world. Now, guys, yes, I believe the biggest stock market crash is going to come. Will it come into October? I don't know about that. But it's really interesting to see the 1987 and the 1929, which is very, very similar to right now. You can see here this 1980, the 1929, it was... The 1929 stock market crashed on... What date was that? So it peaked in September 3rd, July. I think it was. So 1929, October 24, right? So it was October 24 that actually happened, which caused basically the Great Depression of 1929. So that's happened there. Very, very similar situation in October. Now, let's go have a look at the 1987. When did the 1987 happen? What day was that? Does it actually say what date it was? So it began 1989. So this happened on October the 19th, 1987. So guys, October, for the biggest stock market crashes we've seen, have been the worst, right? We've seen September the 11th. We saw 2008 was September going into October. So we saw 1987, 1929. Guys, this is just, to me, I'm just showing you, like, here's some of the facts we've seen in the past. And guys, all I say is that I'm looking at what Albert Einstein says. If you want to see the future, if you want to know the future, look at the past. The people have played this game before. And you can see similar situations. History, I think someone said, history doesn't repeat itself, but it rhymes. And so you can see what's actually going on through here. You can see how we're actually coming to this 1987, guys. And that's where I'm saying, like, I believe this 1929 situation and the 1929 situation, 1929 and 1987 situation, we're likely to have those things combined is exactly what's happening right now. But the thing is that if you have a look at it, not only that, but the whole world is in shemozzles. If 2008 was bad, just think about this here for a minute, guys. If 2008 was really bad, what was it? It was just the American stock. It was the American housing market. Think about that. What's happening right now? It's the bond market. It's the stock market. It's the property market. It's everywhere. It's the Chinese. It's Europe. Everywhere is in trouble. Europe banks are in massive trouble. So guys, this is the reason why the biggest stock market crash is coming. Is it in October? I don't know. What do you guys think? Because I'm looking at what the facts of what they're saying here and what generally happens in big stock market and similar situations that happened in the past, and we're seeing it going into October. So guys, for you guys, and all I'm saying, guys, if I'm wrong about this, and again, I'm not saying it's going to be in October. There's basically a question mark on that little thing. You know what I mean? It's a big question mark. Do we come there? But I believe we are going to see a bigger stock market crash than 1987 and 1929 put together is coming. The biggest stock market of history, bigger than 1929 and 1987, I believe, maybe combined. Now, I know that's pretty big to say, but guys, this is just absolutely just crazy what's happening right now in this economy. And guys, just look at the facts for what they're saying. Again, I may be wrong here, but guys, I go on what really successful people say, and you can, and it's really, really, really important. You can actually see these signs as happening. So guys, don't be too surprised if you guys are very, very long on this. And that's the reason why, guys, if you like this video, give it a thumbs up, give me a comment. What do you think about this situation? And a lot of people I know in this video are going to give the thumbs down and they're going to say, John, but this time is different. Really? How is it different to 1987 when they had a lot of institutions? We already saw that last August. So you can't say, oh, that doesn't happen anymore. No, we already know that happens. Right? We already know the valuations are super high crazy. We already know that. What happened in 1929? A very, very similar situation was happening right now. 1929, the stock market kept going higher where the economics were just not supporting it. And major evaluations and all this sort of stuff was happening. And again, you can see it on the chart. What are we starting to see on the Dow Jones right now, guys? What are we starting to see? Let me show you once again, all right? And I want to show you what I'm seeing on the Dow Jones so you guys can see this. This is the line chart of the Dow Jones on a weekly basis. What are we starting to see? We're starting to see where the market's rolling over and it's getting close to October. Is this a sign? We have a peak up here. We have a trough. We're now forming a lower peak here. Is this a sign? What does the daily chart show us? Let's actually go have a look at the daily chart. The daily chart comes down, runs back up, and creates a lower peak. And again, if you look at the overall daily chart as well, the daily chart is actually showing us, on this chart, you can actually clearly see we have a peak, we have a trough, we have a peak, we have a trough, we have a peak. We're rolling down, going into October, which has been the worst time. September, October has been the worst time, and everything economically is shit. Stock market is rolling over. Guys, this is just, all the signs are here. They really, really are. Now, I'm not saying it's going to happen. Who knows what's going to happen? Who knows when the biggest stock market crash in history? But the biggest stock market crash in history is coming. Is it in October? Now, this is, to me, guys, as you can see, everything is coming together. Everything is coming together. October, guys, is going to be one hell of a month. And I would say to you guys out there that if you got long-term investments in this markets, especially the stock market, guys, do yourself a favor and just get out. If I'm wrong, you've saved, you've missed a little bit of the upside. If I'm right, you've saved yourself a lot of money. So look at the risk to reward on this. Yes, the stock market could go up another couple of percent from here, if I'm wrong. Right? But again, I'm not even saying I'm right or wrong. I'm not even saying it's going to happen. I'm just saying everything's leading towards October. But what I'm saying right now is everything economically is shit, and the Dow Jones is actually starting to roll over. Interesting. October. What is going to happen in October this year? Because everything is lining up to be exactly the same as that. This is a major warning. The biggest stock market crash in history is coming. Is it this October? Now, guys, as we know that a stock market crash, the biggest part is the very first part. That's the thing that really wakes people up. And I'm trying to show you the economics, the demographics, not the demographics, but the economics, what's happening back there. I'm also trying to show you the charts, and the charts don't lie. Economics don't lie, and we're starting to see a similar situation here, right? A false breakout, we're starting to roll over. Guys, don't be caught in this. The biggest stock market crash in history is coming. When? We don't know. Is it going to be this October? Guys, give this a thumb up, give it a like, share it with as many people as possible, guys, because I know this video is going to help so many people out there, and that's the reason why I put some time to put it together. Remember, success can be yours if you go claim it, so step up, take massive action, and face your fears today. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course, and I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.